The truth is that blockchain uses a set of immutable data structures, and that provides secure cryptography. So obviously there is a benefit, and it is obviously more secure than a traditional database, but it is not really 100% secure. There's a think that blockchain uses a single version of truth. In reality, it is actually a mutually agreed single version of record, and it actually covers only the data that is native to the chain. So unless the blockchain platform is comprehensive and large enough to have all the information in it, it cannot provide a single version of truth. But having said that, whatever is there on the platform obviously provides a good immutable data. The third myth is that a blockchain database is necessarily better than a traditional database. It is true in some cases, but let us also recognize that we have not tested blockchain on a very wide scale, and blockchains do have a certain level of productivity paradox. So while at a network basis, on a network level, they are very efficient, or they're expected to be very efficient, but the individual nodes of a blockchain platform can actually reduce the efficiency because every single piece of information is actually getting updated on every single node. One obvious use case that I can think of is a payment system. Now, given the multitude of currencies that we have in the APAC region, and most of these currencies being non-convertible, there is a very good benefit of having blockchain-based cryptocurrencies, which will actually provide an opportunity to facilitate cross-border payments and transfers at a much lower fees, which would obviously benefit a whole lot of people, especially the ones who don't have a banking account, for example. Securities provides another opportunity for blockchain. The tokenization of traditional assets, which blockchain allows. So we are talking of traditional assets like stocks and bonds, etc. Blockchain technology will actually enable people to unbundle them and place them in public blockchain, which can be easily sold and in smaller denominations, which increases the efficiency, improves the liquidity, and most importantly, the blockchain solution will actually allow reduced settlement times. The most obvious use case that everybody talks about is trade finance. And Asia, of course, is one of the largest trade finance regions. The two of the largest ports in the world, Shanghai and Singapore, are located in Asia, so obviously it's very, very relevant. Trade finance is also has a very legacy processes, very manual, very paper-based. So essentially having a blockchain technology which replaces this existing legacy processes can provide more transparency, better security, because trade has a lot of chances of fraud. It also creates a greater degree of trust amongst the different trade parties.